Well, that's a wrap on the top headlines of the hour. On that note, let's kickstart this episode of The Money Show. And today we're diving into a topic that has been gaining massive popularity amongst investors: digital gold. In an era of market volatility and rising inflation, digital gold is emerging as a popular hedge against financial uncertainty. So let's understand what exactly is digital gold. Why is it becoming such a sought-after investment? To explore this topic, we have G Chandrashekar, a commodity expert, joining us on the show. Mr. Chandrashekar, thanks so much for taking the time out and speaking to us over here at ET Now. Help us understand, give us a sense for our viewers who might not be familiar with the term. Could you explain what digital gold is and how it differs from traditional gold investment?
Okay. Gold has always been a popular asset for people to own, and more recently for central banks of various countries to own for various reasons, because it's a great hedge against inflation. It's also a safe haven asset, etc., etc. But investment in gold or purchase of gold can take many forms. You can buy physical gold, you can buy bars and coins, you can buy exchange traded funds, you can buy sovereign gold bonds, and there are various ways of investing in gold. And therefore, you can buy futures or options contract, etc. There are multiple ways of investing in gold and getting a good return. A more recent phenomenon is that of digital gold. Digital gold is a way to invest in gold electronically, okay, without owning the physical metal. When you buy jewelry, when you buy bar or coin, you actually own it physically. But when you buy digital gold, you don't possess it physically, but you will own it electronically. You will invest in it electronically. And importantly, of course, the purchase of digital gold is backed by physical gold kept in insured vaults. Purchase of digital gold is backed by physical gold, which is kept in insured vaults, and therefore there is a certain security. And therefore, and importantly, when you invest in digital gold, the value of this digital gold is linked to price of physical gold. For when the price of physical gold starts to rise, the value of digital gold also will rise, and that's how you can then sell it. And when you decide to sell, then you can kind of book your profits. Therefore, this is a great new form of investment in gold, in addition to, of course, various other ways of investment which the market has known. Yeah.
Chandrashekar, thanks for that explanation coming in. But help us understand, is there any minimum investment required when you want to purchase digital gold, and also any minimum amount that you need to start off with, that if you want to purchase this type of gold?
Because digital gold is through the private sector, let me contrast it with the sovereign gold bond, which is obviously government backed. Whereas digital gold is not government backed, but it is through the private sector. You can invest as small an amount as, I suspect in one case, even 1 rupee. But the usual number is about 100 rupees. You can invest in very small amount, and that will make you the owner of gold to that extent physically in the electronic form. Therefore, therefore it has huge flexibility. You don't have to invest in gold. If I want to buy 10 grams of gold, I have to pay 70,000 rupees. All right. And then even if I want to buy 1 gram of gold, 7,000 rupees. But here in the digital gold, every month I can save money, and whatever savings I have, I can invest in digital gold. Therefore, it gives tremendous amount of flexibility. And this is very low risk, because the value of digital gold will move in tandem with the value of the physical gold. And what we have seen in the last 20 years, that the value of gold has kept rising and rising and rising. And therefore, investors in gold in general and gold in various forms have all reaped double-digit benefits in some years. Therefore, there is expectation that a gold bull run will hopefully continue into the future.
Okay, and also help us understand, sir, why do you think this type of asset class, first of all, can we even call digital gold an asset class? And if yes, why do you think it's gaining the popularity that we are seeing, especially in a market like today? Is it because it allows fractional ownership of an asset that is really expensive to own, let's say, via a 10-gram model? Tell us why this has been gaining so much popularity recently.
Historically, gold has been a popular asset, and usually the demand for gold goes up during geopolitical uncertainties. That is number one. And what is a geopolitical uncertainty? A war-like situation or political instability. We are facing that kind of a geopolitical instability currently with at least two wars going on. Okay, and that's number one. Therefore, geopolitical uncertainty creates demand for gold. Second one is inflation. Inflation creates a demand for gold because gold price rises along with inflation. Therefore, it neutralizes the adverse effect of inflation. But third and more recent, in my view, is that central banks are beginning to build big reserves of gold because you have fiat currency. That fiat currency needs to be backed by something which is tangible, and what better asset than gold that the central banks can have to shore up their reserves. And therefore, gold will continue to remain popular. And it is not that supply of gold is unlimited. Obviously, supply of gold is limited. Production of gold is limited. And therefore, that makes it a rare metal. And it lends itself to multiple applications, okay, including, of course, jewelry, etc. And therefore, that's been, for millennia, gold has been a popular asset in India and, of course, in other parts of the world. And that's the reason why gold is popular and people want to own. And this is also a great diversification, asset diversification. I don't want to put all my money in equities. I don't want to put all my money in bonds. I don't want to put all my money in fixed deposits. I want to diversify. I'll put some amount of money in equity, some amount in FD, some amount in bonds, some in forex, some in real estate. And I'll certainly put some money in gold also, because gold is a great investment diversifier, asset diversifier. Therefore, it has multiple effects, multiple impacts, and multiple implications. And that's how. And within gold, as I said earlier, you can own physical gold. You can own gold bonds. You can invest in exchange traded funds. And now, of course, you have the digital gold.
So thanks for that explanation. Also want to understand how
Yeah.
exactly does digital gold act as a hedge against inflation? Would it have similar properties like your actual real gold bars?
Actually, if you look at the history of the last 100 years, the price of gold has risen along with inflation. When you have high inflation, gold prices also rises, and that's why it's called a good hedge against inflation, because inflation erodes the value of the fiat currency. For example, dollar is the most popular fiat currency around the world. Therefore, when you have inflation, the value of the fiat currency actually declines or depreciates. And what say $100 can buy with 5% inflation, you will have to spend $105, right? And therefore that becomes so much more expensive. On the other hand, when you invest in gold, because gold is such a rare commodity and it's an investment asset class, and the gold price of gold also keeps rising along with the depreciation of the currency, and therefore it's called a hedge against inflation. Whatever depreciation that I face in my currency is neutralized by the rise in price of gold, and that's why it's called it's a hedge against inflation, and that's how gold continues to remain quite popular.
Okay, and so if someone is considering investing in digital gold, now that we've understood what it is, what are the pros
Yeah,
and the cons, how would you advise
yeah.
them to go about it? What are some of the basic steps and factors that they need to undertake and remember?
Now, I think we need to understand some of the risk factors also as far as gold is concerned. For example, digital gold is certainly taxed on capital gains, based, of course, on how long it is held. There is no doubt at all. I think beyond 3 years, it will become a long-term capital gain. In less than 3 years, there will be a short-term capital gain. Therefore, it will be subject to tax implication. Also, digital gold does not have any special tax benefit. Okay, when you invest in digital gold, you're not going to get any special tax benefit. But for me, another factor is that the digital gold market is not a regulated market. For example, SEBI is a regulator for the equities market and commodity derivatives market, right? For the securities market. But digital gold is not seen as a security, and therefore SEBI is not the regulator, or there's no regulator for the digital gold market. And also we must remember there are management fee associated with buying or selling of digital gold, and more important, the value of the digital gold is completely dependent on the market. That is on the physical price of gold in the physical market, and therefore these are uncertainties or risk factors which investors have to bear in mind. But notwithstanding all that, if you were to invest in digital gold, you don't have to incur any expense relating to insurance or keeping that gold in safe custody, because it is in electronic form, it is in digital form, it's not in physical form. And therefore, to that extent, those kinds of expenses of insurance and safety, they are absent, and to that extent, it is beneficial. Therefore, overall, I would think that if someone has a certain budget to invest in gold, I would think a part of the gold should be in jewelry, that is in physical form, jewelry or coins, etc., or gold bars. If the budget is big, a part of this should be could be in exchange traded funds. A part of it could be in futures and options, and a part of it could be in digital gold. That's how you, even within the gold portfolio, you can have diversification. I think that is the kind of advice I would give. But depends on what is the budget of the investor to invest in gold.
Brilliant answer. I hope that clears a lot of doubts for our viewers. Just before we let you go, on a parting note, help us understand, do you see digital gold becoming even more mainstream in the coming years?
Yes, it should, but it needs to be marketed well. There is no doubt at all. There are two things. There are some people tradition-bound people who actually want to own and possess physical gold. But there are investors who don't care, who just want to invest and benefit from the price fluctuations or price escalation of physical gold in the marketplace. Therefore, this digital gold is very good for those who want to invest, for investors who want to put their money in gold for investment purposes and to get a good return on investment. And for them, they don't want to have the hassle of handling physical gold or handling any documents or security relating to holding physical gold. And for them, I think the digital gold will be a great avenue to invest.
Okay.
And because it is backed by physical gold, it is not an asset without a substance.
Right.
It has an underlying, and therefore to that extent it is secure.
Okay. Mr. Chandrashekar, thanks so much for joining us and helping our viewers understand everything about digital gold and investing in it. It's been a pleasure speaking to you, sir, and we hope to reconnect with you very soon again. On that note, we'll let you go. But viewers, with that, it's time to slip into a very short break on this edition of The Money Show. On the other side, we'll throw the floor open to all your mutual fund queries with our expert joining us shortly. So you stay tuned. We'll be right back after this very short break.